Hey guys, Funsho here from We Coach Crypto, and today I'm going to be speaking to you about 5 things you should know before you invest into cryptocurrencies. The first one is, how much should you invest? We recommend that people allocate somewhere between 5 to 10% of their portfolio to cryptocurrency. Now, people need to remember it's very high risk, so it must be a long-term investment, and people need to look at it very similar to how they would investing into a small cap tech stock. For wealth and investment management, it's extremely important to understand that number one, it's affordable for you and you're not reliant on any of these funds. Okay, so the crypto market, with it being as volatile that it is, and the longevity that you need to be thinking of is a minimum of 12 to 18 months as your investment period, with up to 10% of your overall total portfolio being allocated to cryptocurrencies. Number 2 is researching the marketplace. Okay, so what I find with so many people that invest in cryptocurrencies, they don't actually understand what they've invested into. So if you've gone out and bought some Bitcoin and some Ethereum and some Shiba Inu and some Dogecoin, can you explain to me in 30 seconds what each one of these projects does? Okay, if you can't, then you don't understand what you're investing into. So it's really important to research the marketplace to understand the market itself. Okay, how old this market is, the volatility of this market, what the expected growth is likely to look like, where we are in the market cycle and what those market cycles look like also. It's also really important to make sure that you understand how to identify a quality project. So what kind of research are you carrying out there? Well, things that you have to look into is the utility of the project and its token. And you also need to look at the setup of that business. And the way that you would look at that is by reading the white paper. The white paper is like the business plan for that project, and it gives you a roadmap and an understanding of what they've already achieved and what they are looking to achieve in the future. It's also very important to stay on top of the news to understand anything new or immediate that happens with that project. This could be something positive or negative, and as a result may require you to take some form of action. And you also need to be looking at who's running this project, who are the team behind it, what kind of experience do they have, are they reliable, have they done previous work that you can look at and think, yeah, I can trust these people. Then you also want to get engaged with the community as well. Speak to the community and see what they have to say about it, because you can normally tell a lot about a business based on the customers and the people that champion it. Other things that are extremely important to highlight is understanding tokenomics too. So, are you talking about an inflationary or deflationary cryptocurrency? And what do those things mean? What are the overall tokenomics? How many coins are in circulation? What the circulating supply is, the total supply, what the vesting periods are, if there are vesting periods, and also looking at the overall market capitalization and previous performance to look at previous all-time lows, previous all-time highs, and what the sentiment is in general for each individual project that you choose to invest your hard-earned money into. Number 3 is time horizon. Okay, now this is really important. If you do not set the tone for how long this investment is, and I did speak about that previously, then you can get caught out very easily. So things that you've got to understand is the strategy that you will employ and what the time frame of that will look like. So are you going to be regularly pulling profits? and setting yourself price targets for that? Are you going to be doing a buy and hold strategy for the long term where you are continually accumulating a certain project or a certain portfolio where you're buying any opportunities where there are discounted prices of these particular projects? And also just making sure that you're comfortable with the fact that if something in the market does not look positive, that you can ride that storm out, because ultimately, as I've already said, it is a roller coaster because it's an extremely young, volatile marketplace. But with volatility comes huge opportunities. So number 4 is pulling profit. One of the biggest mistakes I see with early investors in this space is not pulling profits regularly. So I give this same analogy to all of my clients. It's like getting into an elevator. Okay, so if you get into an elevator and you go up 10 floors, that's fantastic. You've just gone up 10x, 10 floors you've gone up. But if you don't get out on that level, then you just go straight back down again. So understanding the market cycles and understanding what your profit taking strategy should look like, that's realistic and not greedy, but you have regular intervals of taking that profit, can be the difference between you getting a 3x on your investment over a 12 to 18 month period and getting a 15 to 20x on your investment in the same period. And then lastly, number 5, which is risk versus reward. Now, the crypto market, as things stand at the time of this video going out, currently has over 17,800 crypto projects that are available for people to invest into. So how do you pick the right projects? So the research is important, obviously, but you've also got to think about the risk versus reward. So based on the way that you diversify your portfolio and what your risk appetite looks like, you need to be sure that the projects that you're investing into and the capital you put into them is done in a smart way. So we don't want to be taking huge risks when we don't need to in a market that brings fantastic returns for people. For example, Bitcoin on average is giving people a 3x on their money. So for every £10,000 they put into Bitcoin in a 12-month period, it's bringing them back 3 times that amount, including their original investment. So that's a low risk opportunity with Bitcoin in a high risk environment. But when you start talking about some of the other opportunities that are out there, for example, Solana, which I brought to all of our clients at $11, and it went up to $260, that's a 25x on your investment. And this is in a matter of less than 6 months. So the opportunities are out there to make fantastic gains. But would I be putting 50% of the capital I'm investing into an opportunity that looks like that? So there you have 5 things that you should understand before investing in cryptocurrencies. And if you're looking for more information of this nature, don't forget to join our free Discord group. The link is in the description, and we look forward to catching you in the next video. Take care.